Well, hello everyone. Welcome to Trading Price Patterns. My name is Barbara Armstrong. I'm a coach with Schwab. Delighted that you are joining me today. And whether you're watching this live or in the archives, I'm glad that you're here and taking advantage of this education. If you are not following me on in the land of X, I invite you to do so. My handle is at Barb Armstrong CS. We also have the pleasure of having James Boyd, who's a friend and fellow coach, with us riding shotgun in the chat. And if you're not following James on X, you are missing out, my friends. James Boyd, CS, be there, be square. So today, what are we talking about? Sometimes in this class, we kind of go with a theme. So we'll pick a certain trading strategy and then look at a number of different setups where trading that strategy might be an appropriate choice. Sometimes we look at a particular price pattern, and I had a price pattern all picked out yesterday because I was seeing tons of them. It was bear flags, and I thought today we're going to talk about bear flags. But today there's a lot of green on the screen. So we are going to look at conditional setups. We're going to look at a little bit of a lot of different things. So today is kind of a potluck day in the world of trading price patterns. And I hope that you'll walk away, with some news or a way of looking at things that you will find useful going forward. Just keep in mind as we look at these things that you know that options carry a high level of risk and aren't suitable for all investors. Also know that we use the Paper Money software application on the Thinkorswim desktop platform, which is a brilliant place to learn. Make sure you understand your trading plan and the strategy before you consider trading it in a live account. Know that there are some nuances and differences. One is that short options can be assigned at any time, regardless of how far they are in the money. In a live account, in Paper Money, that will never happen. But we can discuss, how we would handle it if that happened, and we often do. Okay, so let's get out to the charts. And I used to spend a fair amount of time kind of going over what was going on in the markets, and Trader Talks, which is at the market open 9:30, does such a great job on that. We're going to have a quick look at the SPX and the NASDAQ and the Dow, but I'm not going to go into a lot of detail. But, we're officially in correction territory on these indexes. And, we saw two up days last Thursday and Friday, and then Friday and Monday. And then Tuesday, things started pulling back again. Now, today we have another update, but do you look at this and see a confirmed trend reversal? And some would say, I say nay, nay. And others would say, well, it could be. And the answer is, neither one of you is wrong, but the jury is still out. This year, like about 3 years ago, seems to be sponsored by the American Chiropractic Association because there's a lot of whiplash, it seems, happening so far this year. And the same thing on the NASDAQ. We've had a pretty significant pullback here. Let me just get my drawing tool. At one point down almost 14%. We're still down, 11. And, one day does not a trend reversal make, because yesterday this was looking very much like a bear flag, wasn't it? And so this could be a one-day anomaly, or this could be the beginning of a trend reversal, and we just don't know yet. So what do you do when you don't know? Well, some might say, I'm going to go skiing or I'm going to go golfing instead. And some might say, well, I'm going to look for opportunities. And when I said, there's a lot of green on the screen, if we come to the market watch, here's the NASDAQ. Intel not looking so hot today. On a survey of one day, but there's a lot of green on this screen. And if we look at the S&P 500, once again, we have a few little islands of red, but compared to yesterday where it was, the Red Sea, a lot of green on the screen here today also. Okay. So, BJ is saying, show me a double bottom. And yesterday we talked about, double tops and triple tops and, head and shoulders patterns, which we saw on CMG, for example, this kind of head and shoulders type pattern. And then it did break down, to the downside. So we had that kind of confirmation. But we also saw a lot of, things on the other side, like Vertex, where, here we have, just let me get my drawing tool, where we had a head and shoulders on CMG. There we go. I've got green, actually, it looks like. Look at that. That's a new color. And I just missed St. Patrick's Day. Here we've got, our inverted head and shoulders with a breakout, and it's come back up to this previous high and seems to be pulling back. So might it come back and retest? Absolutely. And so one of the things that we could do when we see a setup like this is, could we put an alert? Maybe it's at 507, maybe here around 495, and say, hey, if it comes back here, we could watch for a bounce and maybe enter a trade here. Now, this is an expensive stock, and I treat this as a companion class to the Monday and Friday trading a smaller account. But, could we put in an alert? Now, as an expensive stock, we might not want to buy a call or 100 shares of the stock. But, if it bounces, could we do a short put vertical or a long call vertical? And the answer is maybe. So what we're going to do here is put an alert in and just say, hey, we're going to just come down to create an alert and say, hey, if this comes back, to at or below. So if it comes back and kisses it, this 495-ish level, let us know. Or you can make this number whatever you want. We could make it 496. But if it pulls back, or you may just want to put it on a little watch list, for, watch for an entry. Or you might say, I want my entry to be if it goes above this 520 level. So we could also put in an alert and say, hey, let us know if this goes above 520. Okay. Okay. I'm just having a quick look at the chat here. Okay. So let's go and look at one of the trades that we put on last Friday. And we, because we're going to look at some conditional orders today. And so we had put on a conditional order on Delta. And why did we do that? Well, I mean, this stock has kind of had a great fall, hasn't it? I mean, it has fallen by 38%. It's still down like 33%. And so what we did on Friday was we said, hey, if it goes below the low of this day, then get us in. Or maybe we put this in on Monday. I think actually it was on Friday. And that's why, it was 20 cents below the low of this day. Well, then, on Monday it went up. Tuesday it came down, but it didn't go below this day. And now it's moving up again. So what we might just say is, you know what, we're just going to cancel this order. And we can always look at it and put another order on, but what that prevented us from doing was ending up placing an order based on our expectation, which didn't follow through. And had we placed that order, it would not be making money for us right now. So we're going to come to our working orders. Here's Delta. We were waiting for a trigger on this, and we're just going to cancel it. And so there's our order on Delta gone. And that's one way to handle a conditional order, and it's one of the benefits of placing a conditional order is that we saved ourselves from placing an order which, as of this moment, would not have gone in our favor. And then the other thing with a conditional order, because we had placed a conditional order also on Tesla, and we ended up getting into that order on Monday and then getting out on Tuesday. And that was another conditional order that we had placed. And if we come and we look at our account statement on this, we got in this on Monday. And then, We placed the order on the 14th on Friday, and that had a conditional entry on it. And then on Monday, it filled right as the market opened. And on Tuesday, we got out of it again right after the market opened. These are Mountain Time, 7:32 and 7:35. And we made about $1.30 on that, which turned out to be about a 60% gain. And so, you know what? If you're wondering how I did that math, if you're newer to all of this, just quickly, so you would just take, we paid $2.20 to get in, and we could have lost all of that $2.20, and we got out for $3.55. So that was $1.35 we made, or $135, and we were risking $220. So our return on risk, if I divide one by the other, it was 61%. And our goal was 50. So, we got a bit of a better fill than we were looking for. You see, we put in the exit here at 3:30. We got filled at 3:55. Now, this may have been a bit of what we call a paper money fill. I don't have a live example here, but sometimes they're pretty close and sometimes there's a little bit of variation. Okay. So that was that one. And so that's an example of two conditional orders, one that got filled and was profitable, one that we ended up avoiding placing altogether that wouldn't have been profitable. So things can go both ways. And then sometimes you can get nicked in and then the trade can go against you. So, that can happen too. So let's look at a new conditional order opportunity, if you will. Let me just close that. Okay, so let's come out to Apple. And many of you say, you might say like, hey, I like this company. I like what they stand for. And I had this conversation with a friend before I became a coach. And it's like, you can love a stock, but if it is in fact pulling back, you can love it from the sidelines. And if you have options in your kit bag, you might be able to profit from a stock as it's pulling back. And today, you will see posted, I'm doing this candlestick, this mini series, and just let me bring that over. Sorry, that wasn't very graceful, was it? And so we've got the first three in here. This is under the trade management mini sessions. They're also going to be in the getting started with technical analysis series. So we've got the first three. The fourth one is called a shooting star, and you'll see that posted this afternoon. I will also post it on Twitter. And this is one of the reasons that you want to hit that subscribe button in the bottom right corner if you haven't done that already, because what comes up when you come to this, complimentary resource is whatever is currently being taught. And then if you come to playlists, then you can scroll down to, the playlist for this class or to any other. This is what is an inverted hammer is the mini session. And I had promised that I would get another trading plan. Oh, there's the shooting star. I'll get that moved up to the top. We'll move that up today. But stay tuned and keep checking on these blue ones, which are the example trading plans. Because the next one up will be a long call, a long put with a 1 ATR target, or a long put with a swing target. And these are more evergreen in nature, as opposed to what we're doing in a class like this, where we're taking these concepts and applying them, with what's happening in the market now. Okay, so when we come and we look at Apple, and this was all a long-winded way of getting to, what are we seeing here? We are seeing a shooting star, right? Right. And this shooting star, might be an indication of what? Well, it might be an indication that this, this pattern, that we have a bull flag setting up. And so how might we take advantage of that? Because, it could continue to go up. This shooting star pattern, if you watch that, it's like a 4-minute video. This shooting star pattern, what you need is confirmation the next day with a close. And what is confirmation is if the next day it closes below the body of this candle. And we don't have that yet. Today is shooting star day. So it may not end up being what some would consider a tradable pattern. But tomorrow I'm going to be on a plane. And Friday I'm going to be in Chicago doing the advanced options workshop with Mr. Ben Watson. And so I won't be placing that trade tomorrow. But I hate to miss it if the opportunity comes my way. Let's just say I did want to place this trade hypothetically. And so what one might say is, well, you know what? The low today is 213.91. So if it goes below 213.71, I would like to sell a put, please. Or sorry, I would like to buy a put, because my expectation is it might come back down to this 208.42 level. And so I could set up a swing trade. Okay. And so let's come to the trade tab. And how would we set that up? We may look at the map later, just spoiler. Okay, so we're going to come out to April 17th. That gives us 29 days. We are looking at, and remember, we don't want to risk more than $500 on any one trade. We've got lots of volume here. So our example trading plan, would say, hey, do we trade at least 1 million shares a day? Check. Do we have at least 20 times the number of contracts? We've got thousands of contracts. We're going to do one. So check. Is there a tight bid-ask spread? Check. So check, check, check. So we are looking to buy. And why are we picking the 340 when we can risk up to 500? Well, we aren't in this trade yet. And we're not going to enter the trade unless it goes below 213.71, which is 20 cents below today's low. So we know that when we do buy this, we're going to have to pay more for it. So we're going to put this as a buy. Okay. And we're going to make it a market order that's good till canceled. And it's conditional based, whoops, that's my chat. Conditional based on if the price of Apple goes at or below 213.71, then we want to buy this put. If it doesn't go below that, then we have saved ourselves from placing a trade that would not have worked out. Okay, and then when do we want to exit? We are going to put in a first trigger sequence, right click, create an opposite order, and we're going to make this a market order too. Only it's not going to be based on 213.71. We're going to say, hey, if it goes to 209, just above that previous low, which was 208 and change. So if it goes down to 209, then we'd like to sell this put that we've bought. Okay, and market order looks a little weird, doesn't it? So we're going to come to confirm and send. So we want to buy a put on Apple because we're bearish, right? We'd be bearish. Yes. If Apple goes below today's low, and today's low is 213.91, so 20 cents below that, 213.71, we're in. Then when do we want to get out? If it goes below 209. So this is, we're going to put this in our long put group. And this is a conditional entry and a swing target. So if we go back and go, what were we doing? And you always want to read the notes, at the bottom. Okay. Somebody's saying, is the shooting star pattern the same as an evening star? No, it's not quite, but it can be part of an evening star pattern, but it's not the same. Good question though. But so Evening Star is coming up. I haven't recorded that one yet, but it's coming. It's coming to a station near you soon. Okay, so but thanks for asking. That one's okay. So that one's Apple. Now let's go look at Goldman Sachs. Yeah. Okay. So with Goldman Sachs, this is part of the financial sector, and the financial sector has been enjoying some strength, and then like everything else, it started pulling back, and so did Goldman Sachs. So when you look at this, what might be setting up? You know, it could be another bear flag, right? Right. Because if we look at this, so it is kind of a modified, modified bear flag day, in some ways after all, isn't it? Because it came down, rallied for a day, came down, rallied for a day, came down. And so far we're 4 days into this rally, but do we have a higher high yet? Yes, we do not. We do not. Yes, you're right, BJ. This could be a bear flag setting up, but we don't have confirmation yet. And what would confirmation of a bear flag be? A close below the low of the high day. And sometimes if we want to place a conditional order, we might say, well, if it trades below the low of the high day, and that can come and sometimes nick us into a trade. And then, like I said, it may not necessarily work out. But what's one of the things that might make us nervous if we have a small account and we're looking at placing a conditional order on Goldman Sachs? This is a $553 stock. And yes, it has fallen from 672, but it's not exactly in the cheap seats, is it? And so maybe what we do is just say, hey, the low of this day was 544.60. 44.60. Maybe we just put in an alert, because if we come and we look at the price of these options, 1900, and we could lose all of it, 1500, 13, like we're way out of the money here, and that's still $955. And so this might be an example of an opportunity where someone with a smaller account, or someone even with a larger account who wants to define their risk, might say, hey, you know what? I'd like to do a long put vertical, but maybe I'll just place that trade once I get an alert. Now, could we put in a conditional order? Because we did do that on Tesla on Friday. We could, and maybe we'll do an example of that with a long put vertical. But, with this, we might just say, okay, I'm going to come out here and I'm going to just go below here, and this will give me a price. So this is 542. Well, we said we wanted it to be around 545, 544.60. So if it goes below that, and then we can put a note into ourselves, place a long put vertical trade, question mark. So is that one way we can do it? Yes. And someone is saying, it looks like a higher low to me. Well, it's back above the 200-day moving average, which some might, see as a bullish sign. But, just it and technical analysis, some of it is like a Rorschach test. But, we had a low here, and then we had a lower low, and then we had a lower low. Now, there isn't a higher low yet, because so far we've just been moving up. And when we look at the highs, let me just change the color. We had a high here, a high here, a high here, and a high here. So far, if I'm playing I Spy with my little eye, I do not see either a higher low. All I'm seeing is low, lower low, lower low, and high, lower high, lower high, lower high. So far, the downtrend is still intact. You know, according to my analysis, and that doesn't mean I'm always right, but that's what I'm seeing. Okay. But you know what? If you don't ask a question, we can't talk about it. Yeah. And you know, somebody is saying like this could in fact end up setting up a sideways pattern. Yeah, and it could. It hasn't yet, but it could. Yeah. So we'll just have to wait and see. But we have an alert placed so that we can take advantage of this, you know, should that opportunity come our way. Okay. So that was, you know, Goldman Sachs. Now, how about Visa? Yeah, Greg is saying, you know, you've got 4 green days, though. Does that mean anything? Well, it means that things could be changing. Things could be changing. You know, so, you know, and then we look at this, you know, at Visa, which was uptrending, and then 2 days down, 1 day up, down, up, down, up, down. You know, and now we've had 4 up days, but you know, when we really look at this, we had 2 big up days, then we have this candle, which, you know, in trader speak, they would call a hanging man, you know, which is an indication if you had confirmation, if the next day it had closed below, then that would have been considered a trend reversal and saying, okay, maybe this bearish trend is continuing. Today we have kind of this doji pattern where so far the buyers and sellers are duking it out. At one point, the buyers were ahead. At one point, the sellers were ahead. And right now, it's like playing tug of war and they're back in the middle. Okay, so who knows where it'll be? And you know, the confirmation on this pattern would be if it closes below. So could we say, okay, today's low is 334.50? Could we put an alert in and say, hey, if this starts to pull back, could we buy a long put and do a swing trade? Well, we could do any number of things, but we'd want to be aware. You know, and so you could say, okay, where was that low? 334.50. Put in an alert. And this is, we want to see if it goes below that 334 kind of level. And then maybe do a bearish swing trade. And if you want to see your alerts on the chart, you can come up to this sprocket and say, hey, show me my alerts. And so we can see that we have an alert in here to let us know if it comes back down. Now, we're not going to spend the whole class doing this, but, you know, are there other opportunities out there? How about ACN? Now, here you might say, well, hey, you had that kind of shooting star kind of pattern, or sorry, hanging man kind of pattern happening yesterday, and we have a bearish candle today, but do we have a close below the low of the high day yet? We do not. And so, you know, you might just want to, you know, be patient on that, or put an alert in, or you know, your rule might say, I don't have to wait for that. How about Adobe? Well, Adobe looks good, and you know, we're moving below the low of the high day, but we've already got a short call vertical trade on and a long put vertical trade on. And, you know, when we look at those, they're doing just fine, I think. Adobe, yeah, we're up 17% on our long put vertical, and on our short call vertical, we're up 19%. I think we just put those on Monday. So that's Adobe. How about, we already talked about CMG. How about Lowe's? Same thing, right? And Lowe's, we had a high here of 287 and it's come down to 220. So, this has been kind of rolling down the hill here for a while. It's down, 22%. And again, we had this drop, bear flag. And then today we have this inverted hammer. So could that be showing that this little pullback is complete? By the end of the day, this is up a whopping 22 cents and the day isn't over yet. So could it be a bearish sign by the end of the day? So could we look at that and say, hey, if it goes below this low, so here we have 222, if it goes below 222.30, then we'd like to place a trade. And you might say like, oh my word, all she's doing is placing alerts. How annoying. Well, what's more annoying is if you're placing trades and they're not profitable, that's really annoying. So we might make this, where are we now? 223, 222. What was that low? Sorry, create. That low was 222.57. So if it goes below 222, we might look for that. Somebody was asking about Newmont. So Newmont, I think I posted this on, and this is a different kind of patience, right? So we looked at Newmont yesterday and I posted something on X. I will often post images of charts with, playing I Spy. And, we have what here? We could put this in a dictionary, a trading dictionary for cup and handle. Here's our cup, here's our handle, but here's our resistance level or our ceiling. And yesterday, when I posted this yesterday, I said, we're flirting with it. But has it really broken out yet? No breakout yet. And so what are we doing? We're being patient. And so here's something that's a potentially bullish opportunity, but we don't have a confirmation yet. So could we just say, hey, you know what? I'm willing to buy the stock. This thing pays a dividend. And, if it in fact pulls back, it's like, oh, okay, you're okay with that if it pulls back to here? Or what if it pulls back all the way to here? You okay with that? Now, mining stocks have been doing very well. Gold hit an all-time high yesterday. But if you're trying to exercise discipline and patience, you might say, hey, if this hits, a 48.20, then let me know. And then I'll place a trade. So this would be a conditional bullish offer. Wiley and Kevin, yeah. And somebody's saying, so you put in a trade with a tight stop. And yeah, you can do that. But the tighter your stop, the higher the probability of it being triggered. So let's say, you put in a tight stop and you say, okay, I'm going to buy this stock here. It's currently trading at 47.77. But if it goes below 47, then I want out. Well, how can I figure out what the probability is of my stop being triggered? Well, if I come to the trade tab and we don't have 47 per se, we have a 47.50, but we have this is probability of touching, which means this is the probability of Newmont Mines sometime in the next 29 days coming down and giving the 47.50 price a smooch, even if it's just for a minute, like a little peck on the cheek. 95% chance of it hitting 47.50 and a 55% chance of it coming down and hitting 45. And so, when you look at that, you say, well, that's just kind of saying, okay, come take my money. Because the probability is very high of it triggering that stop. Now you might say, well, I'd rather buy a protective put instead. And here we have, here's the 47. So in the next 23 days, you've got almost an 85% chance of that stop being triggered. So it depends on how you define tight. But coming to the option chain, even if you don't normally trade options, and putting in this probability of touching, and this is a fluid number. So if the stock jumped up in price tomorrow, then, this number would change accordingly. It would go down. Okay. So that's Newmont. But if we look at this chart, we might just say, hey, if this gets above this high, 48.68, so if it gets to 48.70, let us know. And then we'd place maybe a bullish trade. Bullish trade, perhaps. And you know what? You don't have to worry about your spelling or if you're being all articulate. You might want to do a long call vertical, or you might, do a stock trade, or you could do a short put. You have any number of bullish options that you could consider depending on your account size and what your goal is and all of that. But what you're trying to prevent yourself from doing is placing a trade based on an expectation that doesn't come to reality. And, this could come down and form like a little double bottom here, or it could break through tomorrow. Like it's still flirting is, how I like to say that. Now, let's go, given we're on the letter N, let's go look at Netflix. Now with Netflix, and if we back the truck up a little, this is unlike many stocks, it's up almost 6% year to date. I think we can get rid of that. So this has been uptrending and it came down. It's still well above the 100-day moving average, or this is the 200-day moving average. And it came down and it has bounced in up 2 days, back one, up 2 days, back one, and it's up again today. Now we have earnings coming up. We want to be mindful of that. Earnings is on the 17th. But if we thought this might continue to move bullishly, and we are between the 30 and the 10, and some might say, oh, I'm not comfortable with that, I'd want it to be above the 30 as well. Well, then you wouldn't place a bullish trade. But if you're saying, I'm seeing now a higher high, higher low, higher high, higher low, we have it trading above the high of the low day here. I'm going to come out and do something modestly bullish. So what might modestly bullish be? Well, if we say, hey, just for the next 3 weeks, I could see this getting and staying above 955. It's at 951. I'm going to buy the 30. I'm going to buy the 950, which I can't afford to just buy that option because it's over $3,000. So I'm going to do this as a vertical, where instead of having to spend $3,600 to $3,700, which I can't afford to lose, I'm now risking $275, which wouldn't blow up my account if I did lose that much. And so, in our example trading plan, our goal is to make 50% on these. Now, let's say we meet on Monday and we've already made 30. Might we say, hey, you know what, 30% good enough, especially if we see a candle that indicates it may be due for a bit of a pullback. And so we're going to do 2 of these, single order, first trigger sequence, right click. We're going to create an opposite order and say, hey, when this is worth about $4, I'd like to buy it back. You know what? Somebody's saying, why are you using the 30? Because I see a lot of people use the 20. And I see a lot of people use the 50 too, for that matter. And the honest answer is because when I started as a client, The coach that I watched most used the 30. He used the 10 and the 30, and his lines were, they were red and blue, and I made my lines the same color as his lines, and I used the same time frames, and it has worked well for me, and I have never switched. So Kyle, that's why I use the 30. I'm a product of the education that I signed up for, that I embraced back in 2011. I don't know. I mean, a lot of you know that because you've been with me for years, but I started as a client of this education back in 2011, and I still very much think like a client, and I'm still very much learning on a daily basis. And I, started as a coach in 2016. And I met James Boyd for the first time at an investor conference at a live event. Yeah. So, yeah, and I was annoyed. It's like, how can I not have known you? Because I thought he was such an amazing teacher. And you know what? If you aren't following James, man, you are missing out. Now, if you're brand new, it'll be a little bit like drinking from a fire hose. But it's worth standing in that stream to get whatever you can, and then just keep coming back. So guys, we are almost out of time. That 45 minutes, it goes by fast, doesn't it? So one of the things, when there is a survey, and I don't think there is one today, correct me if I'm wrong, James, but when there is a survey, one of the things I'm often asked to do is just, can you review what we did? So we did a trade on Netflix with no conditions. So we did a long call vertical trade that expires on April 11th, and we put a target in to get out when we're up 50%. Okay. Now we put in some conditional orders, and if we want to see those, these are sorted by time placed. So we put in a conditional order to buy a put on Apple if it goes below today's low. Okay. And then we put in, and that was it. Then we did a lot of alerts. Okay. So we put in a lot of alerts to trigger us to go back in and look at placing a trade. And we looked at lots of different price patterns. We looked at bullish, we looked at bearish, we were all over the place. If you're in Chicago this weekend, please come up and say hello. I would love the opportunity to meet you. The following couple of events, there's one coming up in Detroit. Kevin Horner and Ben Watson will be there. But please come up and introduce yourself. And if you haven't been to a live event, I hope you'll consider it, because they're really, really awesome. I loved attending them as a client, and I still love attending them as a coach. So that's a wrap for today. Hit the like button. It helps move this up in the algorithm so more people can find this content. It also lets James and I know that you found this valuable. So thank you in advance for that. Hit the subscribe button in the bottom right corner if you haven't already done that. And then don't forget to follow us in the land of X, Barbara Armstrong CS and James Boyd CS. And if you haven't checked out the example trading plans under the trade management mini sessions or the candlestick short videos, most of those are going to be 3 or 4 minutes long. Go check them out. Thanks, everyone. Have a great day. We'll see you in a webcast coming up soon.